We were not taught financial literacy as kids.
Come on.
Especially in our nationality.
Yeah.
Again, I'm not trying to make about race, but that's just the facts.
That's the truth.
That's the data, man. The numbers show.
Right. If you learn how to become your own bank, I mean, just imagine not having to do the whole car loan route and having to go through all these hoops and underwriting and all this stuff when you could you got the money here.
You have to think of this as like a vehicle, a different vehicle to put your money in that has guaranteed compounded interest.
And when you borrow money from these policies, because it's a loan, it's not considered income.
Too much game.
Yo, what's going on? It's your boy Jeremy Cash.
Yo, what's good? This is Loso06 on IG.
Hey, man, and today we're going to talk about why you should become your own banker.
Boy.
Yeah, let's get to it.
Hey, look, we told them last episode we had a surprise for them. We have not been bringing anybody on the show, and this is the first day.
The first
episode, we're bringing guests on the show.
Let's go. It's going to be a good one, too.
Man. Oh, this is going to be good, man.
So who we got in the building today?
Man, we got to introduce the people, man. So I got to give you guys a backstory first, though. So Kim, and I'll let her introduce herself in a second. Kim is a very, very good friend of mine. She's literally my sister. You know, She's a friend of the family. She's been rocking with us for, years. Yeah. And she's always been that sister that makes sure she puts her brothers in position to win. When she found out about this infinite banking and why you should become your bank concept, when I listened to her, I knew from jump I needed that with the infrastructure that I'm trying to build when it comes to day trading, real estate investing, things like that. Yeah. But I ain't gonna take the shine. I gotta give all the kudos to her.
Yes,
so
indeed.
Without further ado, if we can, Miss Kim, you can give us an introduction of who you are, what you do, and what you bring to the table, and then we'll pass the mic to my boy Mike as well.
Let's get it.
Goodness, that just warms my heart. Yes. I've been knowing Carlos and I've been with the family for a very, very long time. And honestly, like this kind of found me. You know, I have a history in the medical field. And after 2020, after my dad passed away, and I started learning more about life insurance and how he didn't have enough, and also, but how you can use it for different strategies. I was listening to different people and I was like, wait a minute, what? And so I remember coming across this webinar and I was like, as soon as I heard it, I said, I gotta get my license. I gotta get into this because this is crazy. Like this has been going on forever. And one of the first people I thought about was Carlos. I was like, oh my God, I gotta learn this. I gotta do all the research, everything I need to do so I can get this thing, so I can introduce. He was like literally one of the first ones because I know his mind and he has a brilliant mind. And I knew this would like blow his mind even more, you know, and so that's part of my history. I just wanted to give you the Cliff Note version, but yes, this is an amazing advanced strategy that you can use with life insurance. So we're excited to be here, you know, to talk about it. And another thing too, just before Michael hops in, I remember when I learned about this, a lot of people don't know about this, even as agents. There are a lot of agents in the industry that have no idea about this because they haven't been trained. So it does take specialized training, but I also wanted to make sure I was around the right people. So I prayed and was like, Lord, I need a good mentor for this space. And God blessed me with Michael. And so this is my colleague. He is amazing. And so I'm gonna throw it back over to you, Carlos, so you can, you know, do what you do.
Most definitely. So hey, I ain't gonna waste too much time on being on the mic. Hey, my brother Mike here, when I first got my policy, he walked me through this thing, and I'm telling you, man, I was looking at the premiums. I'm like, all right, let's adjust this. Yeah. All right, let's adjust this. We went through so many different illustrations to get the policy right. Yeah. And he did not waver. Him and Kim made sure I was comfortable every step of the way. Oh yeah. Not only did they get my policy set up, they got my wife's policy set up as well. And that's why I say, you know what, we should bring them on the podcast. Absolutely, man. Because I'm a big believer in being a product of the product. 100%. I can't go and tell somebody how good something is if I don't ain't doing it. Right. You see what I'm saying?
Yeah, it don't make sense.
And so without further ado, Mike, if you can actually do an intro about yourself, you know, what makes you the man, you know, when it comes to infinite banking, my brother.
Hey man, hey brothers, I appreciate the invite. I feel like part of the family already, man. Especially as long as we've been knowing each other, man. And pleasure to meet you, Jeremy. But you know, man, for me, it's kind of a journey for me as well. You know, this reminds me of like a family reunion you go to, man, and everybody knows about Uncle Leroy's secret, but you, right? And then you find out about it, and that's kind of how it felt, man. Because to Kim's point, I mean, this is not taught in your basic financial services course. This is not taught. I found out about this by going to another company, and I was blown away, man. In fact, I was a little upset because I'm like, why nobody talking about this when I was in my 20s and my 30s, you know? So I'm finding out about this a little later on. But, you know, long story short, you know, it's been a blessing to me. Kim and I, we both have multiple policies as well. So I've been using this, man. So just like you said, it's been a blessing to my family. I've been investing with it. I've been paying off debt. I mean, it has so many different applications. But I'm originally from New Orleans, Louisiana, and you know, born and raised, man. Been married for about 34 years to my beautiful wife, Tanny, and we have an aspiring AAU basketball kid, Jeremiah, who keeps us busy, man. But and we're also retired from the Air Force after about 24 years.
Thank you for your service, bro.
Oh yeah, for sure. Thank you for your service.
And happy Veterans Day.
Yes,
I appreciate that as well, man. So I'm a musician as well, play keyboards and teach as well. So this has been a journey for me, man, in terms of, and I probably will highlight from a military perspective, you know, because I have a lot of stories, but this one I think will probably be apropos for what we talk about today. There was one time I was in Afghanistan, deployed twice, and there's one deployment where we were actually in Kabul, Afghanistan, and I remember this one time, and we were on, we're headed to a site, and so on our way, I'm in the back of the Humvee, and I'm checking out the sites, obviously being vigilant. And I noticed that there's this blood that's rolling down the road as we're going up a hill. I'm like, where's this blood coming from? So my eyes, you know, kind of circling around, finding, and then I noticed that there's a whole herd of cattle and sheep and goat. So I'm looking up and I'm saying, well, what the heck these goats are going to? And there's this lion going to this hill. In front of these goats, man, is I guess you call it a butcher. Now in those countries, man, there's no humane way to slaughter animals, right? Right. So what I noticed was that in the front of the line, these animals were shaking. They were defecating on themselves. And the reason why is because they were watching the other animals literally be slaughtered in front of them. But here's what messed me up. In the back of the line, the animals that were just there in the back of the herd had no idea what was going on. Wow. Yeah. They were just in line. Yeah. So what it caused me to think, I said, you know, if you follow the herd, you will get slaughtered.
Yeah, 100%.
Man, that's deep.
That's good.
So when it comes to these kind of financial principles, you know, I realize that sometimes there has to be a paradigm shift in how you think, and because you know we raised, our mom told us this, you know, Leroy told us to do this, man.
Yes.
But the reality is that as a leader, you have to keep reading.
100%.
So one of the things that Kim and I discovered, man, when we discovered this principle and this policy and this strategy, we were like, man, this is amazing. That first of all, number one, most people don't know about it.
No.
Number two, this is not new. This has been around for 200 years.
Yeah,
there you go.
Literally.
You know, so long story short, when we start getting into this, man, and we're just thinking about, well, how many people can we bless with this concept? Because it's not about us. Kim and I always approach this from an education perspective, not selling. We want you to understand how it works. We want you to look under the hood. And so you can understand exactly how this vehicle works. Because if you don't understand how the vehicle works, you're not going to use it.
That part.
I love it. Yo, and I wanna talk about like the pros. So give me a few pros, because I know a lot of people they're uneducated on it. So they you know, they think, you know, life insurance is just about you dying and leaving money to somebody else. You know what I mean? And they don't understand that, you know, the whole life is for while you're alive, to be able to enjoy the money and be able to use it, you know, as a resource to be a blessing, and also to, you know, bless your own self. And so give me some of the pros, either one of you, of the whole life policy.
Kim, you want to start off?
Yeah, I'll name just a few. One thing Mike and I always talk about is having liquidity, having control, and having leverage. Like those are some of the main things, because if you put your money, you have to think of this as like a vehicle, a different vehicle to put your money in. Right? We don't call it an investment because investments go up and down. This is like a different type of vehicle that has guaranteed compounded interest. Okay. And so, but you want to be able to have access to that, because if you lock your money up into some type of other investment account, a 401k, IRAs, different types of IRAs or whatever, you can't have access to that. Right. And you'll be penalized if you pull your own money out of those things. So being able to have liquidity, you put your money in this vehicle, pull that money out, do your investments, put that money back in, and just have that control. Because a lot of times, even when we talk about control, being able to control your own finances is so important. And we see that with our economy, right? And I was just thinking too, like, even as an investor, Carlos, like if you have property, I think about like in 2020 when COVID happened, right? People think, oh, I got property. This is mine. If I need to pull the equity from it, I'll just go to the bank and tell them I'm gonna get the equity. Guess what? You're not in control. The banks are, because a lot of people listen, okay? A lot of times people went to the bank during COVID, they had $100,000 worth of equity in their property. They're like, you know what? I lost my job. Let me go ahead and pull some of this money out of my house. And the banks were like, no, we don't know what's about to happen with the economy. So no. But with these type of concepts, you have control over your own policy. You can pull it. It's all kind of stuff that you can do. So those are some of the highlights that I wanted to share. I know Mike's going to share a little bit more. You can talk about some more of the highlights, Mike.
I mean, that was awesome, Kim. I mean, that was awesome. And I think just to kind of add to some of the things you mentioned, what makes this so unique is really what Kim talked about. When you think about as an investor, you need access to your money. You don't need it to be held up, for a year, or you got to wait for it to come, or you got to deal with the penalties and or they don't do credit checks. You need your money and you need it now. Because as we all know, when an opportunity comes, the worst thing to happen is for an opportunity to come and you not be prepared for it.
Hey, that
100%.
That part.
That's major.
And I wanna piggyback off of that, Mike and Kim. When I was sat down with them, and Jeremy got his policy a lot sooner than me and my wife did. And when I was talking to him about it or whatever, I was like, how I understand it is within, I think it's like, was it 30 days of the money being invested, you can get access to 90% of it. So that was the game changer for me.
Right.
I said, now, wait. Right. You telling me I can go dump $70,000 in this account, and then in 30 days I can get access to 90% of it, Mike? Is that a yes?
And it has to be set up properly, because everybody can't do that. Not everybody
can do that. And when I talk to other people that have the policies, they like, I can't do that. I'm like, you got to set it up a certain way. And this is why we wanted to have you guys on, 100%. Because here's the deal. Being a product of the product is one thing, right? But if you don't have the right people in your corner that's actually setting you up for success, you can actually set yourself back.
Literally.
And for the business that I'm in with real estate, look at this as an example, right? This is something that me and Kim Mike talked about when I get my policy. We haven't done it yet, but we are about to do it very soon, right? So we're dumping money into the policy, and then we're going to let it mature for those 30. We already paid for our year, right? So we just got these policies, full transparency. And now the goal is, opposed to me going to a hard money lender, to go and get my investment money for my down payment and my renovation budget, I now can use my own money and loan against it. Let me make sure they understand that. Look at the camera. Loan against my own money. And Mike, make sure you hold me accountable on this. Isn't it true that when I loan against that money, I can almost set the amount that I pay back within reason?
Well, absolutely. With the policy, there really is no loan repayment requirement. I mean, obviously it makes sense to pay it back, but the beauty
because you gain interest, right? As you pay it back.
Exactly. But the other thing too is the fact that you don't have the pressure of like a traditional loan where there is a repayment requirement, where they want their money, within 30 days, right? With this, if you got a deal that takes 6 months, a year, or 2 years, there's no pressure. There's no email coming to you. There's no mail, no different colored envelopes. There's nobody calling you at your house. Because again, back to what Kim said, you are in control.
See, and that's the best part.
And see, you know what's crazy? Control. You know what's crazy right now? What's happening to me? This is a funny story, and I'm pissed about it. So the last flip that I just sold, that I told you about, we had the house on the market for 6 months. Right? I've never sat on a house that long. Every flip I've done, 3 months max, is gone. House was immaculate, beautifully done. Right? It wasn't that the house was not right. It was that the market wasn't. Exactly. Now, with hard money lenders, hard money, they say that for a reason. They want their money back quick with interest. $19,727 to be exact that I paid in interest-only payments. Wow. It didn't go towards nothing. At all. No principal. No anything. And on top of that, guys, guess what? Now that hard money lender's like, hey, your 6-month period is up.
That's it.
We're going to raise your interest from 10% to, no, I'm sorry, it was at 8% to 24%.
Wow.
If you don't have this house sold literally in a month, I called that hard money lender. Hey man, look, I need an extra 30 days before you do this. I had to immediately pivot and make that house an owner finance property.
Yeah.
God is good.
Come on.
I dropped that house on Marketplace. I got a buyer within 24 hours.
I love it.
If everything goes according to plan, which I know it will, we will close on that house this week. And now that hard money lender that literally texts me today, what's the status?
Right.
He ain't gonna be on my back no more. And now the next house I get, guess what I'm doing, Mike and Kim?
Come on.
I'm using my whole life insurance policy. I'm using my own capital.
That's
and
right.
guess what? I'm the hard money guy paying for my own stuff.
Yep.
And I ain't calling myself saying pay me back because it's my money.
Absolutely.
You feel me?
That's how you do it, man.
Oh my God. But you see, like, it just relieves the pressure when you can become your own banker. Like, and guess what else? You can become the hard money lender now. You could be the one lending out money. And then you get to decide, you know what? Am I going to be really hard on them and raise this 24%? Or maybe I'll just raise it 20%. Or you can shift the market in that area. You know what I'm saying? I just love the fact that you're in control, that you don't have that pressure of that. Paying that money back like that, because it's what do we call it? It's unstructured loan repayment. So it's a beautiful place to be when you're in control.
Now let me ask this question, because I've heard this, that there are a lot of, I guess, insurance, I guess you call them brokers, or people that don't want you to know about these because they don't make as much on them, or they may make more on them than they do term, and there's always like some type of battle there. So what kind of insight do you got on that? Because I got some people that say, whole life is a scam, don't do it. Term is the best way to go. So like what would you guys say about that?
Well, the first thing, Jeremy, is that I mean, Kim Kidabo, we call this the John the Baptist of policies, man, because we have to decrease so that our clients can increase. Okay,
I know that's
right. So the reality of this is the fact that on these policies, we specifically design them where the face amount is not very, very high. And the reason for that, the larger the face amount, the higher the premium, the higher the commission for the agent, right? Okay. So we design it on reverse. We design it where we can reduce the amount of face that you're paying so that the majority of your premium goes into cash accumulation and not just paying for another insurance policy.
That makes sense.
Beautiful.
Yeah.
So, go ahead.
Oh, I'm sorry. I was just going to say, we really, and that's the thing between Michael and I, and that's why we're such an amazing collaboration. We really, really like our heart. We operate out of integrity, right? And our heart is in the right place. Because once we saw this concept, we said, you know what, there are people that, especially people that look like us, that don't know anything about this, that are amazing business people, that have the mindset. Because again, we talked about mindset earlier. You have to have the right mindset. And it's like, you know what, like you said, we decrease so that you all can increase, because we want to make sure we are setting you and your family up to succeed. Because that's what's most important to us. Like, our heart is there. And we know who we answer to, and like God put us in this position to serve, right? So I always say, I work for God, but I serve people, you know what I'm saying? And when you're in the right place, because I'm gonna tell you, in any industry, when I was in the medical field, in real estate, and even in this industry, you have people that they're looking more at what's going to serve them, not what's going to serve the people, and that's just what it is, and so that's why you definitely want to make sure that you do have the right people, that are working with you and that are setting you up properly.
Selfless leadership.
Yeah.
Bro. Like
I love
that's huge, because I experienced it with Kim and Mike.
Yeah.
I mean, they stayed on me. They made sure I was good.
That's
right.
Good.
From starting the application to all the questions to making sure I was prepared to have my physical, all that good stuff. Getting the blood drawn and all that. The doctor coming to the house, making sure your body's in good condition.
Right.
Because the thing is, like she said, we were not taught financial literacy as kids.
Come on.
Especially in our nationality. Again, I'm not trying to make about race, but that's just the facts.
That's the truth.
That's the data, man. The numbers show.
Right.
We're behind as a culture. And that part, I want to change, man. The reason me and Jeremy, we pushed out Too Much Game is because we wanted to do exactly the title. Get out the game.
Yeah.
Right? a lot of people cannot get access to the information because they're not making enough money and they're not in the right rooms.
Right.
It's just that simple.
That is.
Like, you gotta have the right type of income to actually get access to the right rooms.
Facts.
People may say, "Oh man, it don't matter." No, it does matter. Because guess what? When you get to a certain tax bracket, your conversations are different.
Literally.
And when you go to certain rooms, you got certain people that's still talking about their glory days 20 years ago. Then you got certain people that are talking about how to take over the world, and how to make millions.
Right.
That's the room that me and Jeremy want to be in, because we talk about those gains.
That's
we
true.
talk about that in the day trading space.
Yeah.
Right. And a lot of people don't understand that information is key to everything.
Literally.
It ain't about what you know.
It's who you know.
It's about who you know.
Your network
Period.
is your network.
Say it again.
Your network is your network.
Amen.
You know
I'm
what I mean?
telling you.
I love it. I love this information because when I first found out about it, I read a book called "What Would the Rockefellers Do?" And that book there, I said, "Wow, this is next level stuff." I said, "Why is not more people talking about this?"
Yeah.
And it makes sense why not, because I mean,
it's a
cheat code. They don't want people to know. You know what I mean? And if you learn how to become your own bank, I mean, just imagine not having to do the whole car loan route and having to go through all these hoops and underwriting and all this stuff when you got the money here.
Can we talk about that?
Come on, talk about it, brother.
So Mike and Kim, I want y'all to make sure y'all fact check us on this now.
Yeah.
Jeremy brought up the car situation. You know what I'm about to ask?
Come on.
So if I had enough money in my banker policy, right? Let's say I dumped 80 grand into it. And then within that 30 days, I get 90%. Are you telling me that I can actually go and loan that money to go get a bank draft to buy me a car with that investment, but still have my initial capital in there and I can just pay it back?
That is one of the most amazing things about the policy, is the fact that you're able to, and kind of go back to your real estate example, right? Where you there's a house, you took advantage, you borrowed money, okay, you bought the house. But if that had been inside your policy, imagine this, because what happens with these loans is that when you get a loan from these policies, they never touch your cash that's growing inside the policy. Your cash grows uninterrupted by any loan activity. So what that means is that as your money is deployed elsewhere, whether it's a car, real estate, crypto, whatever that money is deployed to, you're still earning compound interest and dividends on cash that was never touched. So leverage game is there.
Yeah,
that's crazy.
100%.
But here's the caveat: you have to make sure you have the right person setting up these policies, because I have seen, and we've been in this state. I mean, I've had clients that are like, hey, I got this policy, and I just was talking to them about regular mortgage protection or something, and they said, yeah, I have this whole life policy, and to help me be prepared for retirement. I said, well, let me look at it, and I look at it, and I'm like, oh, baby, no, that's not what that is. Somebody told you wrong. These are not guarantees, because there are policies out there that people are saying that what men do is different than what they're doing. So you have to make sure, like you said, it's not what you know, it's who you know. That you're connected with the right network of people to make sure you're taking care of properly.
Listen, so real quick question. So I know as far as like taxes, right?
Let's talk about it.
Is it true that you have to make sure you borrow the money versus cashing it out? Because if you cash it out, there's taxes involved.
Well, yeah, the right terminology will say is withdrawals. Like whenever So whenever you access the loans, you don't want to do a withdrawal because you're basically cashing out the policy. You want to do a loan, right? And so and think about it. Whether we're talking about insurance or any loan, let's say like Warren Buffett. When Warren Buffett wants extra money for an investment, yeah, he could liquidate his stock. But what he's going to he's not going to do that. He's a smart guy. So what he'll do, he'll take his stock to the bank and say, hey, Mr. Banker, look, this stock is worth $80 million. I need a $50 million loan. The bank is going to look at that stock and evaluate and say, is it worth $80 million? And he'll say, yes. You say, yes, it is. So they're going to give Warren Buffett $50 million. He pays no taxes on it.
Right, because it's dead.
He still got the stock that he never liquidated.
My God.
Beautiful. See, that's the same thing with the policy. Same thing with the policy.
Leverage, the power of leverage, Yeah.
Hey, so let's talk about the taxes a little bit deeper. So to me, and again, y'all correct me if I'm wrong, but to me, this policy is a very key ingredient to anything you're doing as an entrepreneur. Right? Or a business owner or a part-time entrepreneur.
Yeah.
You need a policy like this because this is one piece of the puzzle. You know, because eventually, and you guys already know, we're going to be talking about what an investment trust is and things like that. Because there's certain levels and ingredients you need to build this vehicle and this infrastructure to avoid paying so much on taxes. We talked about the tax stuff on the episode down in Miami, and we talked about how much we had to pay in taxes and stuff like that. If we would have had this policy and investment trust and things like that already set up as day traders or investors or stock investors, these are the ingredients to make sure that your tax payment is lower.
A whole lot lower.
Am I right, Kim and Mike, with saying that?
Absolutely. And we obviously, you know, prove the disclaimer, you know, we're not tax experts.
We're not accounting or tax experts. But we do. Go ahead, Mike.
But the reality is that people that, you know, look like us, don't look like us, have been using these strategies for over 100 years, over 200 years, really. Wow. A lot of people are not aware that, and this is, you know, here's the other thing that makes this legit is the fact that this whole concept is in the IRS code, 7702.
Woo, say it again. Say the code again.
The code called 7702.
Y'all better write it down.
7702.
Y'all better write it down.
Yeah, 7702 that talks about borrowing money from these dividend-paying whole life policies. And what it basically states is that when you borrow money from these policies, because it's a loan, it's not considered income. And if it's not considered income, it's not taxable.
Right. That part. Yeah.
So that's why it can grow. So think about this. You have an asset that the cash, once you put money into it, it's growing tax-free.
Yes.
Right?
Boy.
Number two, when you pull the money out of the loan, it's tax-free because it's not considered income.
That's right. There you go. See,
I love that.
In my head, this is a generational vehicle.
Yeah.
Right? And the reason why I say you agree, Mike?
Yeah.
Absolutely.
100%. 100%.
How I look at it is, and again, this is why, again, I hate to say this, but a lot of us always think when somebody say I'm gonna get a policy out on you, they set you up for the okie doke. They're gonna be poisoning you with fentanyl, you know what I'm saying, tomorrow. And it's like, how I look at it is, after I started understanding this stuff, I called my mom. Yeah. And my mom already has a policy, but it's, you know, it's limited. And I'm like, hey, you know, these are things that we should have had in place years ago. Right. Mom was like, well, can I get one still? And I said, I'll talk to Mike and Kim about it, because she sees the benefit. Right. And I do a lot for I'm paying bills for her. I'm making sure she's good. And the same thing with my nephews. Right. Like, I have the policy. Wifey has the policy. My next step is mom, both of my nephews, my brother. That's good. Like, why wouldn't the whole family have policies? Right. And we all work together to build the empire.
That's the bank right there.
To build the legacy of generational wealth.
100%.
But that's the only thing that we didn't do as an ethnicity, is set ourselves up to pass down wealth.
Yeah, because one thing I can't stand is the GoFundMe's, bro.
Bro.
And we don't.
Why are we still doing that? We have the same access as everybody else, but we don't want to work together.
Come on.
The dream in my head is for us to all have these policies along with investment trust. Yeah. And we're out here just buying up land and developing real estate, and we're just running that whole ecosystem in a circle of continuation of investing, building, flipping, owner financing, renting.
That was the vision of Black Wall Street back in the day.
That's the key. And it can still be done.
Absolutely.
It's still being done in other little areas. Right. People, I'm seeing all the time. There's a meme going viral right now, and it speaks to me big time. They're talking about making it normal for a family or a group of friends to go buy land, develop on that land, have your own well, have your own solar, have your own backup generators, actually getting into your own grid, having your own farm, your own vegetable, everything you need within that ecosystem. That right there is wealth.
It is.
It ain't about the Lambos and the cars 100%. And the Rollies and all the jewelry.
We need real wealth.
We need real wealth. That's cool. That's just material. It's here today. It's gone tomorrow.
100%.
Right? Can't nobody take my land though.
Come on.
Right? Can't nobody take what I'm building on that type of situation. I'm talking off the grid living.
Yeah.
That's real wealth. But in order to do those type of things that people are already doing, we just don't know about it because they living off the grid. We have to work together.
Have to.
It's that simple in my opinion.
So I do want to ask you guys a question as far as like the health requirements, because I know that's a major factor.
Big
thing. Age as well, because I know, at a certain age or, the health issues and stuff like that. So what are some of the requirements that people need to make sure they can get a policy?
I was going to say, I'll tap in and then I'll let you tap into. But yeah, so health is, and this is something that's major too. A lot of times people they hurry up and wait. I'll just do it later. I'll do it later. I'll do it later. But in reality, insurance companies look at risk. Period. Right. Yeah, and so the older you are, the more expensive the cost of insurance is going to be. And you do have to qualify. If you've had major events, heart attacks, strokes, cancer diagnosis, it's going to be challenging to get any kind of policy, especially good policies, because they're looking at risk, because this is the thing. They have to have that money available. If you die, they got to pay. They can't say, give us about, 3 months and then we'll pay your family. No, they have to pay. And insurance companies they're more stable than banks. That's why we're having this conversation, and so definitely while you're healthy, because health is wealth, honestly. But while you're healthy, we need to be having these conversations. Now, if you've had some health issues, does that automatically decline you? No. If you are dealing with high blood pressure on a couple medications, will you automatically get declined? It depends on the carrier, but not necessarily. We just need to have the conversation and see where you are and see what we need to do, because you have to go through an underwriting process, and ultimately it's up to the underwriters, but we have been able to get a lot of people covered that didn't think that they would get coverage, so you want to tap in, Mike?
That's good. Yeah, and that's a point too, because some of the things that some of the challenges we had, or not challenges we've been able to overcome, especially in this climate, where we have people that smoke marijuana. We have carriers that look at that as non-smokers. We've insured people that have had breast cancer. So it just depends. It's kind of a case by case scenario, but typically what we see, Jeremy, is that when somebody approaches these and we've also had people to get approved with no paramed exam required. Wow. So it just depends upon the actual help. And in some cases, let's say you have someone who's older and maybe they've had some serious health issues, right? Sometimes what we'll do is that if we can't insure them, they can be the owner for a child as long as they're over 18.
Oh, okay.
Nice.
And they can be the owner of the policy. They can put money into the policy. They're insuring the child. But here's the reality: the owner of the policy controls the cash.
Got it. Yeah. So I know people are gonna ask, because that's the first thing I'll do. Man, how much this costs?
Oh yeah.
Like, so can you guys kind of weigh in on what the actual investment could be, what it can look like? Because a lot of people, we're in a really bad economy, right? Yeah. People are trying to get to the point of even keeping groceries on the table, which is really sad that we're at a place where people are trying to figure out, should I eat or pay my rent? That's a problem.
Yeah.
And I think this will help a lot of people if they consider this a way of life and look at it as, this is not an addition. This is a bill that you have to pay. Like, look at it like your car insurance. You can't drive that car without car insurance, can you? And if you do, you get pulled over. It's getting towed. It's gone.
Over with.
It's over with, right? Same thing with a cell phone. You got to pay your bill to actually use your cell phone.
Right.
That's a necessity in a lot of people's lives. Yeah. They say that's a need. Oh, is it really a need? Is it a want or a need? Because in reality, a cell phone is a want.
Right.
You don't need a cell phone.
Yeah.
Right? Like, bro, I can go. They still got pay phones.
Right.
You still can get a landline.
Yeah.
Right? But people think that they need it.
Yeah.
You need this whole life policy. That's what you need. You need a banking policy, because if you plan on setting your family up for the right future, you got to have the right vehicles to do so.
Right.
So in my opinion, you need it. But I want you guys to weigh in on what it looks like for an investment. Like, how low could it be? How high could it be?
Well, when it comes to investment, and this is a great question, because the way we approach these kind of policies is it's not your traditional insurance approach. Number one, traditional insurance, you say, okay, Kim, I want $1 million policy. Kim is going to software, and here's a premium. We're good to go. Okay. This is a little different because we actually have a discussion with this. Is very interactive. And so typically the minimum investment is around $200, but we have clients that put in, 500,000, 2,000, and we have companies where the max, some of them, the max you can put in is 250,000 a year. With other companies, you can put in 500,000 a year on top of that. Okay. So the premiums are also different with these traditional insurance. Hey, that premium is set. You miss a payment, you done, right? After 30 days. These are different because with these kind of policies, the premiums are flexible. I just had a client yesterday call me and say, "Hey, Mike, I'm having some cash flow problems. I can't." They originally wanted to fund the policy at this level. Well, because we have flexible premiums, we were able to drop the premium to the lowest level without having to cancel the policy. Okay. So it didn't affect the cash, didn't affect the legacy. And then when life returns back to normal for them, they can go back and turn the faucet back on and fund at the original side. And then the other thing I would say is for a lot of my business owners, they want to dump additional money, into their policies beyond the premium. And that's always optional. You don't have to do that, but it is optional. So you have flexibility. In fact, you can lower the premiums, and then you also have flexibility in that you can dump additional money into the policy way beyond the actual premium you have. That way, you don't want money just sitting in a bank account when you can put in your policy with growing compound interest and dividends.
I gotta chime in because I'm a certified life coach as well. So I deal a lot with people with mindset, right? Mm-hmm. But you have to have the right mindset for this. Now, this is the thing. Everybody needs insurance. If you have a body, if you have a pulse, you need insurance. This concept is not for everyone. You have to have the proper business type of mindset where you see, because if you put pennies in, pennies is what you're going to get out. You know what I'm saying? And if you just need regular insurance, because anytime I hear somebody, well, if it's how much I got to pay, like if I don't want nothing too expensive, then I'm automatically, we don't just get regular policy. You probably may need term. And then once you see that, honestly, when we talk about mindset, I've had people that make well into the six figures that I'm like, oh, this will be easy for them. They're just getting a regular policy and it's only $100 a month. But then I've seen them not pay it and lose it. And I'm like, you make how much? And so it's a mindset, so you have to have the right mindset for this type of concept and this type of policy, but everybody needs some type of insurance on them. So we, customize and we talk and we consult, we coach and we kind of figure out what's going to be best. But for this thing right here, you have to have the proper mindset.
And one last thing I'll say too, guys, is that one of the things we try to do is when we design these, because there's so many ways you can use it. So think about it. If you have bills, right, and let's say you're paying a credit on Capital One, and you're paying maybe it's $50 is the minimum, but you're paying $100. Okay. Well, you can look at all your bills and look. Let me look at how I can strategize how I'm budgeting here, because if you can use a policy to pay off debt. So what you could do is you could streamline all your debt and say, hey, I'm gonna pay $50. I'm not gonna mess with that. That's the minimum. But that extra $50 that I was giving to Capital One, I'm gonna put that in my policy. Yeah, and just keep going down, and you'll find money that you're already spending. Right. Because here's the reality: either you pay somebody else for interest, or you give up the interest you could be earning.
Come on, boy, Mike, come on, because when you're paying yourself back.
Mike. Boy, hey, money on money, paying money on money. 100%, oh my goodness.
100%.
That's huge.
That is huge.
Like, you know what, Carlos, can I just tap into something again? Because you were talking earlier about, our community and, just like, kind of like the way we think and why we think about life insurance this way. And I want just to bring to light, because I kind of wondered that too. I was like, there's like a missing piece. There's like a gap here, right? Because even my dad, he was a life insurance agent in the 80s and he only had $10,000 of life insurance. And when I asked him, I said, Daddy, that's all you have? And at this time now, he's like 79. But he always said, you need life insurance. But when I found out he only had 10,000, I asked him, I said, Daddy, why do you only have 10,000? And he said, well, that's all you need to bury me. And I said, but Daddy, you got 3 girls. And my dad was very generous, and he would, give us money and give us food and here, come over here and pick this up and buy us cars or whatever. And I'm like, but what about us? And so there's a disconnect here. But I'm gonna tell you, long time ago, there have been a lot of predatory practices towards us in real estate. About the redlining. Well, insurance, there were predatory practices too, long time ago. We actually were able to get insurance. All they would sell us were those type of policies, and then they raised the price on them. So like people just had this mindset of all you need is burial policies. So we have to break that and bring light to this area. Absolutely. So that we know, wait, there's more out there,
There you go.
I love that.
I'm glad you touched on that, Kim, because it's really about the generational curses that we have yet to break. Mm-hmm. Right. And those curses, like, you got to find out who that black sheep is in the family. Right. Like I believe in my heart, I'm the black sheep of my family. I know Jeremy's a black sheep in his family, right? And the people I'm placing myself around, like yourself and Mike, y'all black sheep in y'all family. Y'all are going one step further, right? My mother, like, same concept. She has like, hey, I got literally, I'm in high school, hey, you ain't got to worry about nothing. I got 25,000. Something ever happened to me, knock on the Bible. At that time, I'm like, dang, we rich. Mama rich, right? And then as you get older and older, you realize you got people. I had lunch with an old friend from high school. Shout out Judy. And Judy was like that person in high school that was the top cheerleader. She was the what do you call it, valedictorian and all that. This top of her class type young lady. And I remember when she had hit me up on Instagram and said, Los, I'm super proud of you because you have made a 360 from who you used to be in high school. Right. I was the bad kid. I was always in trouble. I was fighting. Yeah. I wasn't going to go to college. Only reason I went is because everybody else did. And I went with a 2.0 GPA. Yeah. All remedial courses. Like, I was destined to be a failure. Like, it was like, yes, I'm going to be the best at failing. Like, that's just like what it was. But you fast forward, number one, God, nothing but God,
100%,
in my life to get me on the straight and narrow and get my mind in order. And when I had lunch with her, the first thing she said was, it's crazy on who you were then and who you are now. And Carlos, you are impacting a lot of people. I'm coming to you for financial leadership. Yeah. And then when she said that, it hit my heart. I almost cried. I'm like, that's crazy. Because she's the kind of person I would be going to asking those questions. Yeah. Right? And that's the same thing. It doesn't matter what ethnicity. She was Caucasian. Yeah. But what's funny is, here's the deal. She wasn't taught financial leadership either. Right. Right? So her family wasn't doing that. But her father had a trust. Right? And she said, I was supposed to be a trust fund baby. Right. But somebody did some fugaziness in her family and messed it all up. But a lot of people that learned financial literacy the right way as kids, they're set up and they're trust fund babies. You know what they say? Hey, you were fed by a silver spoon. So what? I wish I was fed by a silver spoon. I wish I did have a trust 100%. And I had left my kids something like that. So this is the time, I'm going to speak to the camera. Come on. This is the time that you decide to build the infrastructure, to become the black sheep, to make sure your family's family is well off and taken care of. Yes. If you start now, you will see dividends 100%. Later. Look at Bitcoin. Yeah. Bro, I knew Bitcoin was doing this thing when it hit $7 and I was watching it. I didn't know enough about it to buy it. Right. I bought in at like 50 something. I'm making some good money right now. Right, even at that 50-something buy-in. Yeah. But people don't understand that because they're always looking at the now and not setting up for the future.
Exactly. Just imagine if you would have got a policy at 18.
Bruh.
And till now. Yeah. Where it could be.
I would have had double the portfolio I had.
100%.
You know what I'm saying? I would have had triple the portfolio because I got the vehicle.
Exactly.
It's that simple.
I love it. Real quick, I do want to ask you guys, what's the benefit of having multiple policies, and what are you guys using your policies for today?
Great question. You want to start, Kim, or you want me to do it?
No, you go ahead.
Okay. So let's look at it from this perspective. We talk about the importance of becoming your own bank, right? Well, what do banks do? What do banks do? Let's look under their hood real quick, right? So banks, more than any other institution in the U.S., buy more of these kind of policies than any other institution. So the question is, why do they do it? Because a bank can't just have a life insurance policy, right? So here's what banks do. Banks invest in their future too. Right. So what they'll do, they will insure a lot of their top tier executives put a policy on it. And of course, a portion of the face amount would go to that executive's family if something happens to them. But guess who's the owner of the policy? The banks are.
Yeah.
So guess who controls the cash? So the banks can dump cash into these policies, okay, and then that money grows tax free, right? They can pull money out as a loan, no taxation on it, right?
Right.
But here's the other thing too. What happens when you max out that policy? What do banks do? They get another one. When a bank wants to expand, what does the bank do? They open up another branch.
I love it.
So Jeremy, to your point, the reason for multiple policies is that with these policies, there is a cap in terms of how much you can put on one policy. In fact, I had a client who's into real estate and has a restaurant as well. So he was real skittish at first. He said, man, I haven't heard this thing before. Let me just try. Let me tip my toe in it. So we designed it, and it was like 10 grand he put into it. And then after 10,000, put 10,000 into it. He called me about a month. He said, man, I got about 40,000, bro. Can I dump it into this policy? I said, no, bro, we're not in the room. So I had to create another policy for him so that he could dump more room into it because he didn't want to put it in the bank. Right. So that's the rationale for having multiple policies, because what it allows you to do, it gives you capacity, right? The capacity to dump more income in it, because you don't want a scenario where you have income and you're going to leave it in a bank just earning less than 1%.
It ain't doing nothing for you.
Ain't doing nothing.
Nothing
And
at
you
all.
know what? Just real quick, this is like when y'all start talking, stuff just start opening up for me. So I have to address this. When you were talking about legacy, it is so important to, like you said, establish that legacy, have these multiple policies on your family members, but also not just passing money, but passing the knowledge. Because if you give people money without the knowledge, that money's going to be gone, and your legacy is going to be gone. And what you built when you in the grave, you're going to be rolling over like, I should have told them kids, so make sure, you're passing on the knowledge along with the money. But when you also talked about community, I remember we have another colleague that's out of New York. He does real estate in New York. And he said he had this Jewish kid come into his office, and he was probably 20, 21, 22. And he told him, he said, hey, I want to buy this building. And he looked at him like, are you serious? He was like, in order to even write a contract, I need $200,000 down. He was like, okay, I'll be back in 3 days. Dude came back in 3 days, was like, here's your check. I'm going to get that building. And he was like, hold on. Like, you 22, you a baby. No disrespect. Where you get that money from? And so he said, our community, whenever a child is born, they get a cash value life insurance policy on them 2 weeks old. 2 weeks old is the youngest that you can do it. And imagine not these little the $20 policies, but these are nice, significant policies. And it grows to the point. So when they do get that age, guess what? They take that money out of their policy. They're buying real estate. They're buying businesses. They're not buying bags and cute red bottom shoes. They are doing continue to create that generational wealth within their community. And we wonder how some communities are wealthy. These are tools. These are tools, so yeah.
So how are you guys using your policies like today? Like what's some of the things you guys are doing or have done?
Because mine is super, super easy. Then I'm going to let Mike go. I just started mine. And so I'm still building mine because I actually did have some health issues when we were talking about health. So I wanted to make sure I set myself up and didn't, start it, because I wanted to set myself up properly to make sure I did qualify. So I'm still in the process of building mine, but I'll let Mike talk about his.
Okay. Yeah, exactly. I use my policies for what I love about the term infinite banking is that it's infinite. You can use your policy in so many different ways, right? So I've used my policy is to get rid of debt. I've used my policies to invest. And as far as investors, what I like about the investment part is that if you think about what you have the ability to use your money twice when you have these kind of policies, right? So I got money in my policy. I'll pull it out. There's an investment opportunity comes along and say, hey, I like this. Let me just put some money in this investment, see what it does. Here's the thing I like about this the most. Obviously, investments, they incur risk, right? It can go up and it sure can go down. Right. But because of where I store my wealth, it doesn't matter what happens with the investment. Because what I put in my policy, that amount is still earning compound interest and dividends.
There you go.
So now the goal is to make money. Don't get me wrong. The goal is to make money, right? Right. But my point of the matter is that even if that investment goes south, I'm still earning compound interest and dividends off the original amount I put to my policy.
That part.
Where can you go and do that?
Right.
At all. There's no such thing.
Not at all.
And that's why this vehicle is so quiet. Like everybody talks about it.
Powerful stuff.
So guys, I want to make sure we touch on this before we adjourn as well. To me, this kind of information, you need to be able to sit down with people to really do a Q&A. You know, so I think it'll be a good idea for us to offer a some type of a webinar or a follow-up call to 100%. Our community. If you guys would agree to do that. I know now, guys, I'm looking at the people on the camera. This stuff, information is not free.
Right.
We had to pay for the information.
Come on.
You got to pay for the information.
Yep.
That's just how the world works.
That's how it works.
These individuals, they do this for a living, and they're going to offer a webinar, okay, to get you guys on a call to actually do a Q&A and actually get people set up and signed up if you choose to move forward with them. As you know, me and Jeremy, we're in the day trading space, real estate space, and a lot of people ask me all the time, hey, Los, hey, Jay, where can we invest our money? Right? Like, and they'll ask us to invest it for them, Mike and Kim, all the time. So this is where you invest your money.
Yes.
You put your money into these vehicles, and then when you're ready, you can call me and Jay up and say, hey, I want to invest in one of those real estate projects you're about to do.
Yep.
Jay's about to buy some properties with me.
Come on, I'm ready.
Right? And what do you think I'm going to do? The more people, the better. I keep talking about community. I keep talking about ecosystem.
Yeah.
I can't do it alone.
Facts.
I can go buy a few properties a year.
Yeah.
But if I had a culture of people that have the same setups I have, and I got literally properties coming in every day, 10, 15 a day, I can now go buy 10 to 15 at a time and take care of my community, take care of my culture, make sure my people are set up for success
100%.
The right way. So that being said, Kim and Mike, are you guys cool with doing this private webinar? And we'll talk about what you guys would charge to do it, but for our community. And I'm sure we can get a discount code or something if you guys are cool with it to make sure we can take care of our people.
Oh, yeah.
Absolutely. Hands down, we love to, like, that's our biggest thing. You know, I feel like darkness is ignorance, right? And when you bring light into a space, it takes away that ignorance, right? Yes. And so we love to educate people. We love to help people, like Mike likes to say, under the hood view. The only thing I know, I do know how to check my oil, but I ain't interested in talking and stuff like that. Yeah. But yes, we will love to do this for your community. Absolutely.
Beautiful.
Oh, yeah.
So I want to say this then. So for the community that's following Too Much Game, if you stumbled across this video,
come on,
you about to get blessed.
Come on.
All right? So what I need the community to do is blow these comments up.
Yeah.
Okay. I need y'all to drop in the comments, I want in. That's it.
That's it.
I want people to see that. When they see I want in, at that point, me and Jeremy or one of our assistants will come in and they'll drop you a link on where you can actually get signed up for this future webinar. Is that fair, Kim and Mike?
Yeah. Sounds right.
That work for you guys? Again,
That's
guys,
beautiful.
All you got to say is I want in the comments.
In the comment section.
Blow these comments up for us, man. And Kim and Mike, if you don't mind, can y'all please tell us your IG handles so you guys can get those follows from the people that are watching this video?
Oh, geez. Okay, mine is Kimberly Lewis. I have to look. I'll be forgetting. It's
okay.
like Lewis Inspired.
It's okay.
We're gonna drop it. Make sure we drop it in the description.
Yeah. Kimberly Lewis Inspires or something like that. But yeah, I'll give it to you.
Perfect. Mike, you know yours?
I will send it to you.
Perfect.
Okay.
So guys, we will drop their IG handles in the description as well.
Yes.
That way you guys can, go follow them, give more information, and then we'll actually drop that webinar link to you guys once we actually coordinate with Mike and Kim. Jay, you got anything you else want to talk about?
I just want to say thank you. I just want to say thank you, Kim and Mike, for stopping by. I mean, great information. I'm gonna definitely even have more information later for you guys because I still got some more questions. You know what I'm saying? For my own self and my own personal joint. You know what I'm talking about? Probably open another policy with you guys.
Hey.
But just want to say thank you, and we look forward to working with you again.
100%. Hey, Kim and Mike, you guys have been a blessing in my life. You know what it is, man. Like, we're just now getting started. Some of the concepts you guys gave me, I'm implementing them right now. I'm literally leaving here to go look at a house that I plan on investing, using my policy to get this house, right? So again, being product of the product.
100%.
So without further ado, man, hey, Too Much Game community, thank y'all for tuning in. Thank y'all for showing so much love.
Yes,
we got
indeed.
a huge giveaway coming up. Y'all hear more about that very, very soon. But until then, make sure you keep your energy up.
Let's
and also
go.
make sure you give our honor to God, because that's who is keeping us awoke and us in the right track to get to the next level, man. God bless you guys. Too much game. We out of here.
Peace.
Let's go.